This is an example of a Wolfe wave setup, and moving forward I'm going to produce a lot of examples to help the Wolfe wave traders learn more about this tool, which is amazing. What you can see here is the 4-hour time frame, so we're working with cycles equal to 4 hours, and this is a E-mini futures chart. I have just supplementary indicators below. I've got the Squeeze Pro. This helps me identify periods of contraction and expansion. I've got the MACD being displayed with these lines here, which is basically representing the histogram pattern here in with different settings. I've got cumulative delta. That's another indicator that allows me to measure or assess the volume, because it's not that easy or constructive to make any assumptions based on the volume that's being displayed in a histogram format on your chart. It's better to have it statistically plotted with respect to, well, in this case, the Bollinger Band. You can use whatever volume that you're familiar with, but these are the ones that I use. Now, here on December 21st, the market started to sell off quite aggressively, and on the fourth candle, it immediately reversed, and actually there was a bullish Wolfe wave that was being displayed on a lower time frame. I think it was about 3 minutes or 5 minutes, that was showing a move toward the 6-day moving average. Now on the 4-hour, it did display, but it took 4 hours, so I don't think you would have been able to get that signal until after the 4th hour, right? So one thing with the Wolfe wave is that when you get 4 candles in a row, you can kind of like use a double bottom approach to see if you can get a dirty stink bid to catch the bottom here at 3,789.5. That's professional trading approach, right? Like a professional trader would know that the candles are selling off, and but they're looking for the bounce, and they got an overextended position here on the 4th candle, okay? And then knowing that the 4th candle is extremely long and hard, they could take a stink bid here at 3,789.5, okay, with a very tight stop loss just underneath that, right? So that would be like an advanced trader who has lots of experience, and they would take that type of risk. Now, if you're not, and you're using these Wolfe waves, on a 4-hour Wolfe wave, you're not really going to get that entry there, okay? The 4-hour, it takes 4 hours for this candle to develop, and after the 4th hour, then the plot will be displayed. So then you're looking at the entry and then the price target, and you can see that the price target, which is represented as that green perforated line, is just showing 3.45%. So at the time of entry, you're looking for 3.5%. So you have to ask yourself as a trader, whatever instrument you're trading, is it stocks or options or futures, is 3.45% worthy of you taking that trade, putting that risk in the market, and making, probably not the full 3%, but maybe like 1.5 to 2, right? You have to, if you didn't get execute the precise entry at the double bottom, right, then you're gonna have to expect a lot less once you enter in that trade. So probably not. In this case, if you ask me, I would be looking, actually I would drop the time frame. What we did is we dropped the time frame and used a different Wolfe wave cycle to catch that move, which was on the options. It was a pretty big move. It went from like $1.25 to like $15. But in this case, on a 4-hour, you wouldn't be able to catch that, right? And if you ask me again, like would I take this using like SPY contracts? Probably not. Like there was another attempt that you could have got that there, but would I take this trade? And no, I wouldn't take it, because the return is quite low. It's 3.45 from the time of entry. If I get it in right now, it's probably going to be less than 1%. What's the probability of this Wolfe wave moving toward that target? Well, there is a high probability that it is going to tag that 3,924. But what happens after that? Is it going to really break out and move back above 4,000? And that's none of my business, right? Once the Wolfe wave is done, it's done. You wait for the next Wolfe wave. So here, when you see the 4-hour chart, you can see that the squeeze pro, which is indicating periods of contraction expansion, it's not really expanding or contracting whatsoever. It's still green, right? The last time it experienced a contractive period was back here on the 21st, and then it actually kind of whipsawed and sold off quite aggressively. Here we're already past that period of that sell-off period, and it's doing pretty much nothing here if you think about it outside the box, and it's trading within a range. Now, in order for the Wolfe waves, in order for me to get into a Wolfe wave, there's a couple of things that need to be met. First, the profit target has to be greater than 10 to 15%. Okay, so especially on a daily time frame, right? I'm not going to get into a chart on a daily time frame if it's giving me 3 or 4%. Secondly, it has to have a TTM squeeze, meaning that there's been a sufficient period of time of consolidation. If the third condition would be if you get into an oversold condition, like for example, if the histogram below here is red, but this histogram was being plotted here, then I would look for the yellow histogram for an entry, and then have a reversion back to the green zero line, the green dot zero line, as a potential area to exit. In terms of the volume, it is showing that the volume is biased on the buying side, because it's the volume here is above the mean of that Bollinger Band. So that gives me an idea that there's going to be more upside. But then using the moving averages, any moving average, but in this case the 4-hour moving average, the 50 moving average on the 4-hour time frame, you can see that that's probably going to act like a level of resistance at 3,912.86. And based on my experience, I'm not, if I'm getting in that trade, let's say if I take that trade, I'm not looking to precisely get an exit at this 0.86 level, because that moving average is going to continuously pull lower, bringing this value lower. So you want to kind of undershoot that target from 3,912 to maybe like 3,909 to 10 or something like that. You kind of have to guesstimate, but you're not looking to precisely exit, because if you precisely exit that, it's obviously these are lagging indicators, so it is showing the previous value on the current chart. You're looking to see what it's going to be once it moves up to this area, what that value is going to be. Now you can also use previous level of support and resistance. So there's resistance right here, and the last resistance support once it broke through was right here at 3,924, which is exactly where the Wolfe wave is indicating. And then the next level of resistance is right here where these two candles are. That's at 3,894, right? So let's say you took that trade right here, and then you got 3,894 as your target, then it's only like 0.91%. So I'm not really sure if you want to take that trade, but that's just an example of how you would analyze a situation like this. Let's see if I can find, so if I go through different cycles here and try to find like a Wolfe wave, obviously there's nothing here other than that 4-hour chart. If we take a look at Tesla, for example, you can see Tesla has one that is that triggered a bullish entry here, but you can clearly see there was no This is the one that I'm talking about where after an oversold condition, the histogram converted from red to yellow, and then it already moved toward the 6-day moving average. So that kind of already invalidates the trade. Like, it's already done. It could be the 6 to the 8, and then maybe the 21 if the volume starts to push above the Bollinger Band's average level, that mean, but it didn't, right? So this was like this Wolfe wave on the 3D didn't really have too much going for it, because in order for it to move substantially higher up to 400, there would have to be like a TTM squeeze, and then have the volume and then the momentum all above zero. So this is below zero. This is slightly below zero, but you can see that the slow is still having a negative gradient. And then here on the cumulative delta, every single dot plot here is under zero. So there's no reason for you to take that trade, but at least you know that that's not a valid entry. So you just can't take them blind. But the Wolfe wave will make the analysis a lot more easy for you to understand. Now, if I were to take the short trade, then yeah, of course we had systems taking the short trade, and here you can see that if it doesn't close above that trending line, that 8-day moving average, which is showing a negative gradient, then the path of least resistance as a trend trader is just to stay in that trade until it gets it back above the 8-day moving average. And then there's like several gaps here at 77, 62. Like, if you have the gap tool, it'll help you identify more levels where where price between the buyers and sellers were not filled due to unknown reasons. Those reasons are just obviously confidential between those two parties. So yeah, so when you take a look at the volume here on Tesla, on the ETS cumulative delta, you can also see that the data plot is outside the Bollinger Band, which doesn't happen 68% of the time. It happens about obviously less than that, and that does present an opportunity, but the opportunity is not now. It won't happen until there will be not there. This is looking like a pretty good opportunity for this Tesla to start to break out and run higher, but only when you get your first green volume bar trading within that Bollinger Band. Then that would be a level where a reversion or a reversal would increase in probability such that it moves toward these major moving averages. But in the short term, it doesn't look like that's happening right now on any of the time frames. So this is a setup. That's a type of setup right here where you see an entry, and then you see that massive, like wherever the apex is. The apex is way out here in March in 2 years, and it's showing like a pretty decent return of 235%, right? And that's great. That's the type of setup that I'm looking for. However, when I look at all the nitty-gritty details, there is nothing here that's showing that anyone is really on the side of that idea. Like, okay, maybe 20 years later, maybe 40 years later, that can happen, right? But like I said to everybody, when you're like a newborn baby, you've got like 20-30 years to just do nothing and let all that price action grow for you, right? But when you reach a certain age and you've got all this knowledge, you're not looking to really entertain the idea of holding something for 40 years and waste all that time thinking about what would happen if it reached 235, and there's no guarantee, obviously. So the Wolfe wave, even though the Wolfe wave is showing that there's an idea, a trade idea in the long term to move up from 124 to 235, the consensus in terms of where people are putting their money, mouth where their money is, or money where their mouth is in the opposite direction based on the volume. So that really helps clear the bias and help the trader understand what they're working with and right now it's not the time. Okay. One thing you can do is you can actually like for future reference, what you can do is that you can publish this chart so that it doesn't remove that Wolfe wave. So yeah, the trading view has some limitations. It won't plot these Wolfe waves and keep them there forever. You have to actually publish them and create like a digital journal. And then every so often, so you know that these are three daily candles. So every 3 days, you would probably look at see you know, the published document, digital document you created, and then review that Wolfe wave to see if, you know, what's going on with it with respect to that setup. And that will probably give you additional insight on, you know, what type of entry you're going to take and how the sentiment has changed, if any news or you know, or interest rate that's affected the market has changed the sentiment of the stock. Okay, and that's a really important thing to do, is just to publish, save the setup and in your trading view, and then reference it back so that you can understand where price is at the present relative to what the Wolfe wave has triggered. Okay, so there's going to be more videos coming out like this. I hope this helps a lot. I think after 5 or 6 videos, you're going to get the hang of it. But the tricky part is whether what time frame you're using, right? Because the average holding period is around 3 to 4 cycles, up to 20. 20 cycles is like when you get that TTM squeeze, those red dots, and the price is really expanding based on overbuying and irrational behavior, where it just goes exponential. That happens maybe like 10% of the time, but most of the time that won't happen. But they do happen on lower on different time frames, right? It just doesn't happen on the daily. It just happens a lot less frequently. So you want to just control which time frame you're on. And in my experience, sometimes if you get like a TTM squeeze for a Wolfe wave on a different time frame. So here I got a Wolfe wave on the 3D, but on a different time frame, there's a different time frame on a 30-minute. They are related, but the management time is different. Is going to be different, right? Because you're looking to hire somebody for 30 minutes, but then you're looking at somebody who's willing to work for 3 days, and that's not an apples to apples comparison. You're making the apples to apples comparison between the actual stock, Tesla, but in terms of what you require, one is on a 30-minute and one is on a 3D. So they're different in that respect. So you have to understand that. Okay, thank you very much and have a great day.